So we just finished up with Garvin's construction percentage of completion method for 2012. We're now in our final year, and we're going to run through all the computations, journal entries, and postings to the statement of cash flows, income statement, balance sheet, all in one video to see if we can get through this. All right. Let's start with 2013. We still have a contract price of $10,000. Our costs in the current year are $2,500. The costs that we've incurred in prior years is $6,500. So our total costs to date are $9,000. The additional costs we expect to incur in completing this contract is zero. So our total costs that we expect on this contract are $9,000. So if we look at the $9,000 costs we've incurred to date, the total costs we expect to incur are $9,000. That must mean we are 100% complete. What does that mean? Well, if we look at the contract price minus our total current costs, or our total costs on this contract, we're going to have $1,000 in profit. At 100% complete, that means our estimated profits to date are $1,000. Okay, we need to subtract out our estimated profits to date of $700. And so that's going to then give us profit to recognize in the current year of $1,700. Our contract price is $10,000. We're 100% complete. So we need to recognize through the end of the third year $10,000. We've already recognized to date $6,075. So the amount we need to recognize then in the current year is $3,925. Okay, so the numbers we're going to need from here to complete our journal entries are our cost to date, and that will go in the construction in progress account. We're going to need the revenues to recognize in the current year, and that will go in our final journal entry, the money entry. And we're going to need this as our construction in progress account, but this also is our profit that we're going to recognize. All right, so let's go to the journal entries. Our construction in progress is $2,500, and that's a debit, and we're going to credit cash of $2,500. So let me go ahead and post that right now to that construction in progress account. That $2,500. All right. Coming back to my journal entries then, I had some billings on this contract. I billed another $3,400, and that goes to the billings on contract account for $3,400. And let me post those to my journal and my T account, so that my billings on contract account goes up by $3,400. All right, I received some payment on that accounts receivable, so $3,600 in cash, and I'm going to decrease the accounts receivable by $3,600. And then we have that last journal entry. I'm going to now recognize $1,700 of construction in progress. I know my revenues were $39.25, and again, this cost of construction number is a plug, and it's going to make this balance, and it's $2,225. And again, in an income statement, this is our cost of goods sold number. Okay, so now we've got all our journal entries. Let me post this last little piece to our construction in progress account. There's another $1,700, and if I'm not mistaken, and everything, we're 100% complete, and what goes into this account is all the costs plus all the profit. This account should now be at $10,000, and our billings on contract account should be at $8,000. $885. Okay, and these two numbers then will go into our financial statements. So our revenues were $3,925. Our costs of construction were $2,225. And that means we're going to have a gross profit of $1,700. Okay, I'm going to go ahead and do the common stock. I know then that's my beginning retained earnings plus net income equals ending retained earnings. So ending retained earnings is $1,000. And you can see over the life of this contract, we earned $1,000, and that's what our retained earnings is. So our total balance and total equity is $2,500. I'm going to ignore cash for a second. I'm going to focus on the other accounts. We'll plug back to cash. I have left in accounts receivable $50 if I work through that, and you should with the T account. I have total of $10,000 in my construction in progress account, again, which makes sense because we're at the end of the contract life, and so all costs have incurred and all profits have been recognized. And our billings on contract are $8,850. So I know what this is going to balance to, so let me go ahead and put that in there. But let's then work through our statement of cash flows. Our net income was $1,700. Our change in accounts receivable, well, it went down by $200. So that should be, if beginning minus ending, we have a $200 positive. Our construction in progress account went up by about $4,200. Is that right? I think so. Yep. And doing the math. And then our billings on contract account went up by, let me do it here, $3,400. And, okay, this should be a negative. That's a positive. And if my math is right, this should be an $1,100 positive number. My beginning cash was $200, and so my ending cash is going to be $1,300. And I believe all that ties out. So we have completed all the computations, all the journal entries, and all the financial statements for Garvin's Constructions for 2013.